Y'all, we are going to talk about that thing that we all kind of hate talking about right now, which is interest rates. And with us to talk about interest rates, mortgage loan interest rates, is Kasie Willis from Auto Mortgage Masters. And we're going to try to tackle that dreaded issue. So, where do things currently stand with interest rates?
Okay, so everyone is asking what are interest rates today? Where are they going? We are not 100% certain. I do know from if we go back and look in December to now, we're easily 2 points higher than where we were.
Okay.
So,
for example, an interest rate was, let's just say 3.5 in December. We're now looking at 5.5.
Exactly.
Yeah. And that sounds like a very scary jump for a lot of people. Break that down for me though. If on a let's say on a $200,000 home, what's the difference in like the monthly mortgage payment?
So if we're looking at, let's just say 3.5% on a $200,000 house, and we go up 1 point, you're looking at easy $100 increase in your monthly payment.
Okay.
For that.
Okay. So it's getting a little bit more expensive to own a home. I know it's impossible to predict what interest rates are going to look like, even at the end of this year. What are you kind of hearing in your exposure to mortgages and mortgage loans and interest rates? What's the kind of sense of things?
So where we're at now and where we are predicted to be by the end of the year is looking at potentially maybe 2 more points higher. Are we certain? No, because in December, looking to now, we didn't think that we'd be where we are today, but we are. So, it'll go up, and then some days it may go down a quarter of a point, maybe. If it does, it's super fantastic. Everyone's excited. We're locking in loans. And then, the next week it could be a lot higher. But we just have to follow, do what we can where we are today and make the best decision for yourself.
Yeah. So let's give it some historical perspective though. Like you were talking to me a little bit earlier and you raised a great point about you weren't in the business when interest rates were like what?
Probably 16%.
Yeah, 16%. Right?
Yeah, no.
So you weren't in the business then, but you were in the mortgage business when they were at
like 6.375. And everyone was super excited because it had come so far down from where it was, and that was with excellent credit. We're talking like 780 credit scores, and you're getting that, and people are locking it in, and they're super happy. And we're nowhere near that at the moment. Is it creeping there? Could it by the end of the year? Very possible. So don't let that get you down, and don't let it stop you from buying, because it's only going to slowly get higher.
Yes, and people have owned homes throughout history, even when they were paying 13, 14, 15% interest rates. Now, I think we have certainly heard, or I have certainly heard as a realtor, buyers saying, I'm just going to wait until the prices drop, because of course we're dealing with rising home prices as a result of low inventory, and that's a national problem, not just here. We're dealing with rising, home prices, but it was wonderful, like that mattered less when they were paying these rock bottom interest rates and money was pretty much free to borrow, right? And now we're still dealing with rising home prices, and now buyers are having to deal with rising and escalating interest rates. So I've had a lot of buyers sort of say, not a lot, I've had a couple buyers sort of go, I'm just going to wait till house prices drop, right?
Right.
So what's your feedback on that?
I don't think, if you're serious about buying right now, I don't think it's a good idea to wait because of where we are with interest rates, where we came with the interest rates. I think you should buy. Be serious about buying. Go in with your best offer. Listen to your real estate agent. They know the market. The market's not going down. Obviously, it's continuing to grow up. But the best way to combat that is with your credit score. So I think that's a huge deal because credit scores predict what your interest rate will be. So maybe you come to me with a 640 credit score and someone else comes in with under a 620. the person with a higher score will absolutely get more house because their rate will be lower.
Right.
That's one way to fight this right now.
Okay. And then if someone like calls you up, like someone's looking at this right now and they go, you know what, I have a 640, which is not a horrendous credit score, right? But you have a 640, you really want to get it to 720. Can you advise them on, look, this is what you need to do to get you where you need to be?
Absolutely.
Can you? Yes. Okay.
Yeah. So what you want to do is, and maybe you've heard it, maybe you haven't, but you don't want a lot of debt, because when you buy a house, that's really going to throw your ratios a lot higher than where you are at the moment. So you want to keep those credit cards under 30%. Make sure you're paying on time every month. You don't want any lates. That negatively impacts your score. It also negatively impacts your score when you go over your limit. So when you start getting really over 30% of your balance and higher, it really starts to negatively impact your score. So those things, keeping 1 to 2 credit card on standby for emergencies or gas or something small, pay it off every month if you can, or keep it lower. And that's going to increase your score quicker than just kind of building and never paying it down.
Yeah. So the big picture with interest rates then is, yes, they are rising, but the consumer does have some power over the kind of interest rate that they're quoted, and that is keeping an eye and managing your credit score.
Right. You have control of that. So when you go into this market and ready to buy, that's one thing that you can control to make sure you get the best rate available.
Okay. All right. We're going to wrap that up there on interest rates. Actually, no, there's one more thing I want to touch on, and before we close up, because we are going to get into some other topics. But to the buyers that are saying, we're going to wait for prices to drop and buy then, right?
Right.
But we're having to explain that if and when could be 2 years down the line, if and when prices start to drop on homes, one of the significant factors that could be contributing to that is lower buyer demand as a result of increasing interest rates. Mm-hmm. So you may be buying a house a little bit lower, but you're paying a much higher interest rate at that point. Yeah. Have you ever run the numbers on what spending, let's say, $10,000 less on a home, but paying an interest rate that's 2%, 2 points higher? Yeah. Do those numbers work out? Does that make sense?
So it makes sense, and absolutely we'll do that for any person that comes in and has questions and, hey, what if I wait, or what if I buy now and pay more because of my score, or the house is more, whatever it may be. Every scenario is different. Yes. So I will be more than happy to run that for anybody that needs that, so they can make their best informed decision for themselves.
Yes. Okay, perfect. All right, guys, stay tuned. We're going to be talking with Kasie again about a couple other topics related to borrowing. So stay with us. We'll catch you in a bit.